Hello, it's Monday the 16th, I'm FX Blue and this is the market update. So it could be a critical week for sterling with inflation data and wage data confirming whether or not we're likely to see a rate hike. Meanwhile, the dollar is slightly firmer on the back of the Syrian action and euro inflation data is likely to confirm the ECB stance. So on Friday, sterling rallied. The pound hit a new high against the euro of 115.90 and cable was testing the post-referendum highs just before coming back to close at 142.40. In the UK, the inflation has fallen steadily since the the peak at 3.2% last year, just before the November hike. The November hike was justified by Carney as needed because he felt that inflation was unlikely to fall unaided. And indeed, inflation has fallen faster since the hike. But the MPC may struggle to use that justification for a rate hike this time around. Inflation data due out on Wednesday. The CPI is forecast at 2.5%, which is down from 2.7% last month. So probably not enough to justify a rate hike on its own. So cut to average hourly earnings due out tomorrow because it's a lot more of a focus. Arguably more important than inflation alone at the moment, because the 3-month average is forecast at 2.9%, which it will confirm positive wage growth for the first time in over a year. So that rate hike may well still be on. Over in the US, after Saturday's strikes on Syria, the dollar index has firmed slightly. It's been taken fairly well by the market because of the surgical nature of the action. It should be done and dusted for now, and also should give Russia no reason to respond, militarily at least. An improvement in the risk appetite in the US should now allow the market to start looking at, the core economic data away from the risk appetite. And with several FOMC members speaking this week for the first time since the new Fed chair came in, the market will be looking for any comments, any positive hawkish comments from any one of them to really bring an excuse to bring the 4th rate hike this year back into consideration. So watch out for the dollar reactions there. Meanwhile, the euro dollar still continues to trade in a relatively narrow trading range between 123.07 and 123.46 on Friday. And as I mentioned earlier, the euro is touching fresh lows against sterling. Eurozone inflation data is due out this week and it's expected to fall under 1%. So that clearly strengthens Draghi's case for no monetary policy change in the short term at least. And it certainly calls into question Nowotny's comments last week when he said that the rates will be increased and the asset purchase scheme is likely to be removed this year. So he may well be facing a slap on the wrist when the data comes out there. We'll keep you posted as the week develops. Any questions at all, pop them in the comments below and we'll do our best to respond.